Welcome to Running on Ice, the coolest community in freight. I'm your host, Mary O'Connell, bringing you the latest tech updates, warehouse news, and everything happening in the cold chain world. Not only is there the coolest show in freight, but there's also Running on Ice, a newsletter that could not be colder. You can subscribe to that on freightwaves.com/runningonIce. Today, we are joined by Robert Fortmeyer, Operations Coordinator at Circle Logistics. Thank you so much for joining us today, Robert.
Yeah, thank you for having me. I'm looking forward to it.
Today is a episode that I have been wanting to do for a very long time, but it's taken a while to find the right person to do this. And that is, what is carrier insurance and why does it matter? This is something that I have been wanting to do for a while, and I'm very grateful that you're here to do it with us. Before we get too far into this, let's get some background on you and how you got started at Circle Logistics.
Yeah, so I've been around Circle Logistics for quite some time. My father actually co-founded Circle with Chad Buchanan, so I've kind of had different roles at the company over the years. I formally started in billing. I moved into weekend and after hours track and trace, and then did some customer service type roles with account management, carrier sales. I've worked with the new customer sales teams, and now I just do a variety of different things to help support the business functions.
I like it. You're kind of becoming the jack of all trades, the guy who knows a little bit of everything, just enough to kind of be dangerous.
Absolutely. I joke I'm the Swiss Army knife.
I like it. Not necessarily brought in as a last ditch effort to fix something. You're just like, nah, I got the solution. Give me 5 minutes.
Yep. That's the goal, at least.
All right. So as I mentioned earlier, we're going to kick it back to basics today. And something that I think a lot of us, we think about, but we don't really think about, especially over in the brokerage space. Carrier insurance is kind of the bane of everyone's existence, but it's very important. So taking it back to basics, what is at its very generic baseline level, what is carrier insurance and how does it work?
As a carrier insurance, and we can go more in depth about it later, but at its most basic level, there are two main parts. There's the liability side of the insurance, and there's the cargo side of carrier insurance. The part that mostly concerns the carrier reps in the brokerage space is the cargo insurance. And really what cargo insurance works to do is it tries to cover a carrier for any sort of loss that happens or damage, destruction, whatever happens to the goods that are actually being transported. The cargo insurance will kind of step in and make that shipper or receiver whole for the lost goods.
I like that. And so that's something that we've touched on a lot in this in previous episodes is, the sheer amount of waste that happens in cold chain, regular supply chains, but more specifically in kind of that pharmaceutical and food space, because, with that, it's not like, because there is that extra level of risk of, it's not just, these jeans got hot and like, they just got really warm, but I can still sell them. Whereas in pharmaceutical and food, it's something that is much more high stakes. So if your strawberries do get really hot, well, potentially they're not good, or those drugs, if they get really hot, could potentially harm someone. So I think that especially is where that insurance comes in, because it protects the carrier as well as the shipper in those instances, right?
Right. Yeah. It'll come in to protect the shipper. They're the ones that really lost these goods, right? They were the ones that owned or made these goods, or they're selling these goods, and now these goods are destroyed, whether it's pharmaceuticals, strawberries, bananas, or ice cream, whatever the case might be. They're the ones that really lost it. They've upset their customer because they can't deliver the goods, or they can't use the goods to build something else, or whatever the case might be. So it'll protect them, and it also could protects the carrier, because now the carrier isn't personally on the hook for this shipment. Pharmaceutical shipments, those can be very, very valuable, very expensive losses. So that not having that insurance in place could be detrimental to a carrier. So it protects both parties. Yeah.
Back in the day, I had to ship like research tractors, which were like multi-million-dollar tractors, and I was like, it plants seed in the ground. How can it be that expensive? I've learned when it comes to farm equipment, just start adding zeros. And then when it seems like it's too expensive, that's about the right value for that item. But it's something like because most carriers don't have a couple $1 million laying around for a potential accident or a reefer unit malfunction or whatever may happen. I think that that's as much as a pain in the butt getting insurance and maintaining your insurance and the cost of it is for that time you might need it. When you need it, it's life saving compared to if you didn't have it. Because first of all, I don't know that any shipper, broker, 3PL, anyone would particularly want to do business with a carrier that didn't have insurance.
Yeah, there's not really a lot of trust there in a carrier that has no insurance. I mean, federal law does require at least some insurance, and most states also have their own individual requirements. If you're located in their state or doing business in their state, they might require you to have additional insurance. But there's a lot to be worried about if you're talking to a carrier that has virtually no insurance. That's concerning because it tells you not only that they don't have a lot of care for the goods that you're trusting them with, but what else is going on in that business.
Yeah, that's where we've made jokes before of like if they have Joe's House of Insurance, but like house is spelled wrong, maybe that might not be the most reputable insurance company, and maybe that's a carrier that we should not be working with.
Yeah, absolutely. Or if the name on the insured's name is the same as the producer's name or something like that, and it's like, you're doing both sides of it here.
This is something that is a little trickier. And so, if, for example, the tractors, those are a couple $1 million versus if I had a truck full of strawberries. Let's just pick a random example. As a shipper, how do shippers determine the value of a load? Obviously, it would just kind of be like the price that they could sell it for. But does that different than like the insured value, if that makes sense, what I just said?
Yeah, so it could be different. It'll depend on a variety of different things. Often it'll go based off of the value that's declared on, like, say, the bill of lading or the commercial invoices. Somewhere, some sort of paper trail that can be pointed to say, well, you sold it for this much and we're transporting it, so that's its value. Or maybe it's going from from factory to warehouse or factory to sales yard or something like that, where maybe it's not changing hands, it's not been sold yet, but they declared a value when they arranged for its transportation. And so that's often how it'll go. But, I mean, obviously the number would have to be reasonable. You can't say a truckload of strawberries is $50 million. That's never going to hold up as the declared value, but generally that's the way it'll work, is declared value somewhere, somehow.
I think, you might be able to get a truckload of strawberries up to like at least a couple 100,000, because there's those strawberries that are like $17 for a pack or something like that. There's some of those like really fancy, crazy strawberries, but those aren't very common, I should say.
Yeah. Sold at the specialty stores and not the stores I'm buying from.
It's been something that's come up countless times throughout the industry, and that is the time-honored gray area, or some people refer to it as gray area. I'm sure those in the claims and risk and insurance space consider it pretty black and white, and that is if I have a carrier that just barely doesn't have enough coverage. So let's say that they need to have 500,000, or they need to have $1 million worth of coverage, and this item is valued at like 1.2 or 1.1 million. Is that ever like okay to just put that stuff on the shipment with that potential overage not under their insurance coverage?
I would say generally you're not going to want to, like, general rule, baseline, you don't want to tender a shipment to a carrier that doesn't have the insurance to actually cover that shipment. That would be the baseline, the general starting point. But there are times where it could make sense to send a load to a carrier that doesn't have enough insurance. Maybe the transportation cost increases so much by tendering it to a carrier that does have enough insurance that you can afford to self-insure for that change in value. You can choose to, if you save $400 on the transportation cost, over the time, depending on how many of those you're shipping, maybe it's better to save that $400 for that rainy day if something does go wrong. Or maybe it's better to save that $400, that difference in transportation cost. Maybe it's better to, instead of spending that additional $400 on some carrier, maybe you can go and buy a $300 one-time shipper's interest type policy to cover that $100,000 or $200,000 slight difference. So general rule of thumb, you wouldn't want to dispatch it to the carrier, but there are times, depending on your operations, where it might make sense to say, we'll handle this ourselves rather than forcing you to get more insurance, which will raise our costs.
I kind of like that approach of the generally don't, but also at the same time, if it works for your business, if it's one of your more reputable carriers, that's interesting. I didn't even know that was something that shippers could do, would just be like, now we'll cover the gap here. I feel like I wouldn't want to do that with all my carriers, but maybe like a good one. But I don't know. I think that would also kind of come down to that level of risk that you're willing to accept and take on, because that to me just seems just a touch risky, just a touch too much risk for me. But hey, to each his own. There's also people that like fling themselves off the side of cliffs. So
yeah, not me, but it definitely would be risky. It's and a lot of people, a lot of carriers, a lot of shippers, they wouldn't want to have to deal with that type of carrier that doesn't have the insurance and making those kind of decisions each time, because that takes some additional administrative work or some additional thought process, or what have you. It's additional steps, and it gives you a little bit more worry. So maybe it's better to just pay the slightly increased transportation cost, and you're paying them to worry about it instead of worrying about it yourself.
Yeah, it's kind of that you might save a couple $100s here and there, but are you really saving it if you have to do all this extra paperwork and have all these other people monitoring it and keeping an eye on it? Because then, of course, you're going to spend a lot more time watching that one shipment to make sure nothing happens versus the others that you don't have to babysit because you don't have a financial stake in. I think that's kind of a good way of looking at it. Is you might save a couple $100s here and there, but in the long term, like you're going to spend a lot more of your own like secondary like manpower to watch it and make sure that nothing happens.
Yeah, absolutely.
So one of the things that has come up, and it's kind of exploded everywhere, is that cross-border aspect of it. So I don't even know how, because I fortunately never had to do that much cross-border, which is great, but it makes it a very giant glaring hole in my knowledge. So from basically someone who has never done anything with insurance cross-border, is it the same as the domestic shipment, or is it infinitely more complicated when you're looking to secure insurance for a cross-border shipment? Either US or either US to Canada or US to Mexico or vice versa.
I would say for first addressing like the US Canada, regardless of which direction you're heading, that's generally going to be the same as a domestic shipment. If you look at most policies, whether cargo or liability, most of them are going to say that it covers US and Canada. They won't say Mexico usually. I'd actually be surprised if it said Mexico, but it'll cover US and Canada. So generally speaking, if you're going cross-border that way, the Canadian border, you don't need to worry about anything unique, anything special. The Mexico border, though, that's a little bit different. That's, transporting in Mexico as far as insurance is concerned is almost like the Wild West. There's just not a lot of standardization. There's, a slightly different approach to protecting goods, or how the law enforcement operates, and so it's just a little bit different. And there are definitely a lot of different things that a person or a carrier, broker, shipper should know when they're going to start moving goods across the Mexico border or intra-Mexico. Their policy that they have probably doesn't apply. It doesn't cover anything, but the risk is a little bit different. Mexican laws aren't the same as US laws. So the potential loss is significantly less unless the contract with your shipper, if you're a broker or a carrier, calls for it. So there's a lot of nuances there, and you should definitely kind of know your operations, know what your customer contracts are, and kind of know what your options are.
So I guess if you are, it's refreshing to know that US Canada is not something that you need to dive deep into, and that it's mostly pretty much the same as what you currently have. But it's always Mexico. It's always Mexico that's the problem child, and always has to make things complicated. And honestly, I wonder if it ever gets tired of being referred to as the wild, wild west for supply chain and freight. It makes a girl wonder.
Yeah, I mean it's definitely a fun place to be. You're learning something new every day, and you're trying to put different pieces together. It's definitely a different market than the United States, but I think that's what makes it the Wild West to those in the United States trying to do business in Mexico.
I mean, we've seen a lot more businesses take up operations in Mexico. I mean, a lot of it has been more of the dry van side of things, of the automobile parts. Pretty much a lot of cars and a lot of manufacturing. But that being said, there is still some agriculture, and there is still some demand for that cross-border temperature controlled freight. So I guess since you said there's not really a standard practice and there's no really standardization, how do you know if you have a good or reputable insurance policy? Because I don't think you can just Google, or maybe you can Google like good insurance Mexico. So I guess, how do you know that you have a good policy and that you are covered should, something get destroyed in transit?
I think one of the big things to look at is whether is this policy written by a Mexican insurer, or is it written by an American insurer, or or even like a large global insurer, something based out of London or something like that, because where that insurer is actually located can play a big role in your trust in whether that insurer is actually going to pay out on a claim. But the other important part to think about is, kind of analyzing whether you need to have that insurance. I don't know the exact details, but, in Mexico, there's only like 15 days weights and measures as the cap or something along those lines, as far as what the actual cargo value the carrier can be liable for of the cargo value. It's not necessarily the entire actual value of the shipment, unless the shipper has contracted for it to be different. So you kind of need to know what your underlying actual liability is to know whether you need an insurance policy before you even go down that road of, is this a fair policy? Is this a policy that's actually going to cover me?
That is not the answer I was expecting. I was expecting it to be a lot easier. But as tradition with Mexico, it's it just has to be complicated, doesn't it?
Yeah, you don't want to leave it too simple, because then it won't be the Wild West anymore.
Exactly. Heaven forbid we got like a rule book and a checklist that you could follow. Nope, that's too easy. That's too easy. Okay. Well, is there an advantage to having like a Mexican insurer versus a global one versus a US? Like, is there advantage for one over the other, or is it truly just down to however those contracts are written?
Well, I mean, how the contracts are written plays a very important role. Depending on the way your contract is written, that'll kind of tell your insurer how much to charge, how much they're willing to cover that policy. So that underlying contract with the shipper still makes a very big difference. Or from the shipper's perspective, how your contract with your broker or your carrier is written makes a big difference. But all in all, it's just kind of a leaning towards a global insurer, like a London-based insurer or an American insurer, something like that. Just based on the laws, U.S. and England has very long histories with insurance, and so you kind of know what you're going to get with it. You know what it's going to be, you know what it's going to cover, you know what it's not going to cover. So you have a lot of certainty there. The difference, though, for the person who's actually procuring the insurance, is that Mexican policy, a policy written by a Mexican insurer, is probably going to be significantly less, because they're insuring based on Mexican law, not U.S. law. So it's kind of a balance, just kind of figuring what you're comfortable with.
That's again, not as straightforward. Turns out cross-border is just as complicated as we all thought it was going to be. So I have one more question before we get to the most important question of the day. And that is, are there different clauses in insurance companies, or do you need to double check with a carrier on dry van versus reefer or refrigerated or temperature controlled freight? Like, is there a difference, or should, in theory, one insurance policy that most carriers have cover just about anything that would be on the truck?
Well, generally, the insurers all use these kind of standardized forms. They all start at the same place. The whole industry, the insurance industry, will all kind of use this standardized form for this type of insurance. So all in all, you have a general idea of what you're getting. You know it's going to cover this world of things. The big risk is you don't know what the exclusions are. And so that's kind of where it's going to matter. Is your underlying policy, is it going to cover refrigerated goods? Or is this just a dry van or a flatbed policy? Is it going to exclude ice cream that I'm trying to broker to you, or I'm trying to have you haul, or seafood, or other common exclusions? And that's different between insurers. And even at the same insurer, it might be different between a $250,000 policy and a $100,000 policy. So it's kind of, you can pick up on the trends. You kind of know that this carrier, if it's a $100,000 policy, they probably don't cover, say, ice cream and seafood. But if it's this other insurance carrier rather, and it's a $250,000 policy, you can be pretty confident that it covers just about everything you're going to need it to cover. Maybe it still excludes pharmaceuticals and you need a specialty type of policy for that, but you can figure out a general idea of what the different policies will cover based on the COI.
Okay, so it's kind of one of those where I don't necessarily, like, if I'm a shipper that wants to ship ice cream, strawberries, fruit, whatever, and I have a carrier with like kind of that generic boilerplate policy that I've seen across all my carriers, I know that for the most part, my goods are going to be covered should something happen, which is honestly refreshing after getting through the chaos that is trying to understand Mexico cross-border insurance.
Yeah, it's definitely stabilized here in the U.S. It's definitely predictable. You can kind of know that if I'm working with these good, reputable carriers and they've got a reputable or common insurance policy, or at least as far as I can tell from the COI, you can be pretty confident that your goods are actually covered, unless you're hauling, unless you're shipping something like seafood or ice cream or pharmaceuticals that's commonly excluded, then you can be pretty confident. And if you are hauling one of those specialty things, it's probably a good idea to ask your carrier, hey, is this good excluded from your policy? Because, it makes a big difference in your selection if the carrier actually has no insurance for what they're hauling.
Yeah. And I'm sure I didn't even think that was something that was commonly excluded. And so I think if carriers are looking to, or motor carriers are looking to get into maybe hauling a new type of good or commodity, definitely double checking that insurance policy to make sure that it is in fact covered, because that's the surprise that nobody wants to deal with on the other side of that.
Yeah, the worst case scenario is finding out after you've got some big loss that you're not covered.
And that's an expensive bad day. Bad day.
It sure is.
So that brings us to pretty much the end. And Robert, everyone that comes on this show has to answer this one question. And you, sir, are no exception. So is cereal considered a soup?
I have a tough time with this one because it's not called soup. You don't find it in the soup aisle. But what else would it be? I mean, you put it in a bowl, it's a liquid, and it's got some contents. I mean, it sounds like soup to me, but it's not in the soup category in the grocery store. So I'm gonna have to say that it's its own thing. It's not soup.
I mean, there is the soup aisle and the cereal aisle, and they are not in the same aisle. So I do like your logic there. I'm also team cereal's not a soup, but as everyone that has probably listened to a few episodes knows, that I'm a monster that doesn't actually eat milk with her cereal. So you could say that's definitely not soup, because there's no liquid situation in there. I'm also a fan of you got to have the onion, celery, and carrots, and to like really make it a soup, to really get that flavor.
There are some good soups without all the extras. But yeah, that's a good way to go about it. If kind of what's the base of it and what are the extras? If it's just your grains from the grocery store in a box, it might not be soup.
All right. So if someone wants to reach out about your hot soup takes or anything else regarding kind of carrier insurance, where can they find you outside the show?
You can find me on LinkedIn or reach out to me. My email is rfortmeyer@circledeliverers.com. You can feel free to call, text anything, 260-267-3878. I'm pretty much always available.
All right, you guys heard it here first. Robert's DMs are open for pretty much, I don't want to say anything your heart desires, because that would be potentially very suspicious and crazy, but for any of your transportation needs, Robert's DMs are open. Thank you so much for joining us today.
Yeah, thanks for having me. I enjoyed it.
You can catch other episodes of Running on Ice right here on FreightWaves TV, YouTube, or anywhere else you get your podcasts like Apple Podcasts and Spotify. Need more Running on Ice news? No sweat. Subscribe to the newsletter on freightwaves.com/runningonIce. See you on the internet.